Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Tuesday, October 18th, 2022. It's great being with you here today, and we got industrial production. This is for the month of September. It comes in better than expected, up 0.1. And it's a nice reversal from what we saw in August, which was a decline of 0.1. Looking down the details, we see autos coming back. Yes, August, we generally see a slowdown, retooling as companies prepare for the new model year. Still quite concerning given the low inventory and its effects on the selling rate, which is below 14 million units, where with what we're seeing out of the consumer these days, we would expect things to be most close to more 16 to 17 million in auto sales. So a movement back up in September, a climb of almost 1%. And so that's a healthy sign that we see. We also see natural gas production moving higher, up 1.1%. Now, it's only up 4% year over year. So we're still missing a lot of production and hopeful that we will achieve what the EIA said, as the Energy Information Agency, that we should get back to the peak natural gas production here in the United States that we saw in 2019, next year, 2023. And that'll provide relief. And of course, liquid natural gas that we're starting to ship even more to Europe to mitigate some of the energy problems there. Other numbers we should be aware of, we saw sort of a nice movement in terms of computers, machineries were up. So across the board, very healthy reading. We think about airplanes, which are again an important element. We see good numbers there, and so that's again constructive for the export market. We've seen anecdotal evidence of big orders, especially for aircraft, as the economy, the world starts moving out of the COVID situation. Another thing we do want to be mindful of, and we get this in the utilization number, which continues. It was moved up a little bit north of 80, but which is a healthy reading, but not really where we think it should be today, particularly if we look at semiconductors, right? They're still under 80. And that tells us that materials continue to be the issues. So plants aren't going full out with semiconductors. They need materials, and that they're not getting the materials, and therefore not able to produce the semiconductors, which is a key element for the supply chain these days. So better news out of industrial production. It shows us that the manufacturing, the good side of the equation, continues to do well. We did see a movement down out of the Empire number yesterday. So a little maybe concern, but this number reaffirms the strength that we're seeing in the manufacturing space, which creates jobs, creates opportunities, products that puts us in a strong position for the future. This is Scott Murray, the Daily Economic Market Shout. Thank you for joining me here today.